And that report from Ethna O'Brien. Well, I'm joined now in studio by Michael McGrath, a Fianna Fáil TD and a member of the Oireachtas Finance Committee, and by Karl Deeter of the Irish Mortgage Brokers. Michael McGrath, to you first. We can talk about special negative equity mortgages in a minute, but what the government is doing and what the banks are doing is allowing people to tread water effectively. But isn't it time that you allow them to write off some of the debt? A NAMA for the people?
Well, that question implies, of course, that NAMA involved writing off developers' loans, which, of course, it doesn't. In the case of NAMA, the developers owe NAMA the exact same amount of money as indeed they owe the banks, the only difference being that NAMA is vigorously pursuing the repayment of those loans. But to get to the heart of your question, at the centre of the government's strategy in this area has been the protection of the family home, and all of the policies that we have implemented to date have been to focus on that issue. If you look at the payment of mortgage interest supplement, for example, 17,000 families availing of €63 million. You look at the extension of the mortgage interest relief for people who bought homes in recent years, and the code of conduct for mortgage arrears as well. So all of the policies have been designed to protect the family home insofar as possible.
But as I say, that people would say that's to keep them from going under, if you like. But in the longer term, they're stuck with this massive debt. And isn't it time that perhaps you even looked at this notion of just writing some of it off or putting it into some other system that will allow them to, when things get better, to pay it off?
Well, in Ethna O'Brien's report there, she referred to the expert group on mortgage arrears and personal debt. And of course, the report, which was published last week, was only an interim report. And that report made a number of recommendations to strengthen the code of conduct for mortgage arrears, to ban, as she pointed out, penalty interest, for example. But the more substantive issue of negative equity and the issue of possibly restructuring debt and debt for equity, they're far more complex issues, and they are going to be dealt with in the second part of that report, which will be by the end of September.
And then legislation will be in place, you would hope, by when? The end of the year, or will it require legislation?
Well, in fairness, immediately on publication of the interim report last week, the government said that it accepted in full the recommendations of that report. The financial regulator made a statement also accepting that report and setting out clearly how the recommendations were to be implemented, including a relaxation of the mortgage interest supplement.
When will it come into law?
Well, as soon as the report is published in September, I think you will find that the government won't be found wanting, as it wasn't in relation to the interim report. And once that report is published,
you've been found
there will
wanting
be
in
action.
the fact that they're waiting until September 2010 for this in the first instance, and perhaps you might have done this 2 years ago.
Well, it is a very complex issue, and you're correct in saying through the report there that the IMF did say that there should be targeted incentives for homeowners who are in trouble, and we are already implementing that initiative. But what they didn't say is how exactly you go about it. This has to be fair to all parties, to parties who are struggling with mortgages at the moment, and also to those who are paying their mortgages. And we are determined to strike that balance, and we look forward to implementing the recommendations of the report in September.
Karl Deeter, negative equity mortgages on the agenda. Is this not just allowing people to dig themselves into an even bigger hole?
Not necessarily. I mean, they could go and buy a house that's less than what they're currently living in. And I think in that case it can be a good thing. The bank also have, obviously, reasons for wanting to do that. I mean, the people in negative equity are the same people who hold tracker mortgages. You get them off of a tracker and onto a variable. A lot of the people who might want a negative equity mortgage might go from an apartment to a house, which means you have more security on there. And basically they're taking the same bet on a client that they know is already good for the money, rather than extending it out to society.
So if one of your clients said to you, what do you think, you would say no or be very careful?
Well, you need to be very careful, but I would be absolutely astounded if the regulator doesn't intervene, because I don't think people are going to be able to put up a sign above the door saying get your negative equity mortgage here. And so it needs to be very stringently underwritten. But something that Michael had said about, you know, making sure that we keep families in the home, I mean, he would say keep families in the home. I would say give them an opportunity for a meaningful future. He would say, well, we'll pay their mortgage interest. I would say, why don't we find a way for them to escape from the millstone around their neck, which is the debt that they're carrying. And we can't see housing as an absolute good, you know, somewhere below freedom but above happiness. If people
what are you talking about?
Well, what I'm talking about is let's let people who are in debt they can't pay get out from under it.
How?
And we take whatever the loss is, the person takes on some of the loss, and the bank takes on some of the loss. It's a very adult way of dealing with things.
Well, sure, in theory, but how does it work in practice? How much of the loss, how much of the loan is written off, and who carries what burden?
That's the tricky one. I mean, say if the loan was underwritten well, then perhaps the individual should take more of the loss. If it wasn't underwritten well, if the bank did a 100% mortgage to someone that, upon examining the underwriting, you shouldn't really have done that for, then the bank should take more. It's not rocket science. I mean,
the bank would tell you they don't.
The
bank would tell you that they're already hard pushed. They can't take the pain.
Well, you know, there's a lot of taxpayers who are hard pushed too.
And that's it. So be it. Let them take it. But you know what they'll do? They'll throw it. But they'll throw it back on everybody else by raising interest rates.
But they're doing that anyway.
But they'll do it even further. They'll do it even further.
We're already at a historic low in interest rates, and people have had their wages cut. Taxes have gone up, and there's 35,000 households in total arrears already.
Right. The mortgage brokers are the guys who help get the people into this debt in the first place.
I will tell you, hand on heart, I'm part of the problem, but I can also tell you what part of the solution is. Charlie Weston said today that 1 in 5 households is struggling to pay their mortgage. Are we going to take the view that at any cost we will continue to subsidise the bank, which is what mortgage interest supplement is, in order to keep people in a house they can't afford? Because politically we want to keep them in their homes, but politically we're also seeing there's no debt forgiveness.
Michael McGrath, negative equity mortgage is good idea, bad idea, to be considered?
In certain cases I think they are appropriate. I mean, if for example somebody is in negative equity but is in a good employment situation, is making their repayments in full and has the capacity to make additional payments, then I think in those circumstances it can be considered. But there are issues to be considered. Ultimately it involves bringing additional debt to a person. It also involves additional risk for the bank. So I think it would have to be examined on a case-by-case basis. I think the reality is that on the issue of negative equity, there is no silver bullet. There is no one-size-fits-all solution. If somebody is happy in the property that they're in and they are making their repayments, then negative equity isn't an immediate problem. But if, like Sinead and Philippe, people are looking to move on, then they can feel trapped at the moment. And I think that you will find that the expert group will come up with imaginative solutions to that issue, which are fair to all parties and which I think government will certainly accept.
But those negative equity mortgages that might be offered to people will have to be very, very carefully controlled, because, as Karl Deeter says, the banks may use this as an opportunity to get people off their tracker and onto a higher rate of interest.
Well, absolutely. And I mean, the banks have shown bad form in relation to mortgage lending in the past, with mortgages of in excess of 100%. So the regulator is going to take a stringent approach in this regard, but equally recognising that everyone's individual case is different, and there are people for whom a new mortgage is indeed the appropriate solution, but that will not be the case for all.
So basically people are going to have to just sit tight and hope that they can ride out the recession. You're not offering much hope here.
Well, in the meantime, there are very tangible supports that the taxpayer has put forward. In fairness, in the last budget, Brian Lenihan extended mortgage interest relief to 2017, which in effect benefits people who bought at the height of the property boom over the last number of years.
Michael and Karl, thank you both.